Hey guys, and welcome back to the Accumulation Zone. In today's video we're gonna be taking a look at the free drives reversal pattern. And let's get started straight away. Keep it simple. Free drives pattern, the name already gives it away. We're looking for 3 swing points into a higher time frame PD array. That higher time frame PD array could be simply premium discount. It could be the previous day's low, previous day's high, previous week's low. It all depends on the situation. So, major sell side, higher time frame PD array, and we look for 3 swing points into this PD array. We can look at this free drive setup as a method how market makers can engineer liquidity, because above every lower high right here in this bearish structure to the downside, we form a lower low, lower high, lower low, lower high, lower low to sweep sell side. Above every lower high, we have resting buy side liquidity. And once we push into that higher time frame PD array, we can already consider this as engineered liquidity. And oftentimes, you very likely seen this before, we get a strong reversal even without a pullback. And you might be wondering, how could I be able to anticipate that? Because that's what we get sometimes. We sweep that sell side, and yeah, without ever getting a major pullback, we simply run out the first high, the second high, and that third high to complete the free drives reversal setup. Our second scenario of how the free drives pattern could play out is actually the 2022 model. So you can use the free drives pattern as additional confluence to the 2022 model. We make our 3 swing points into our higher time frame PD array. We run out sell side, and instead of getting a strong reversal with almost no pullback opportunities, entry opportunities on a pullback into the strong reversal trend, we have that 2022 model. And what do we do with the 2022 model? We run higher time frame sell side into a higher time frame PD array. We shift market structure, so we break that first high out of the free drives pattern. We get our pullback towards the optimum trade entry, a fair value gap or a breaker block, and then we continue higher to run out the second high. After we have run out that second high, we pull back one more time and we continue to run the third high. And this is how you can combine the free drives pattern with the 2022 model for even more confluence. So now we have already discussed the free drives pattern basics. We form 3 swing points into a higher time frame PD array, and yeah, we either get a strong reversal because all this, it's engineered liquidity, or we get a 2022 model, so we have additional confluence. The last scenario would be to evolve the free drives pattern into a 4 drives pattern, because sometimes we even make a 4th drive, and sometimes in the very rare cases we make a 5th drive. And same process again. After our 4th drive, what do? We could potentially see a 2022 model opportunity where we enter on the pullback to continue to run out all these highs, engineered liquidity. Or we could also see a potential strong reversal. Very simple, because all this is engineered liquidity. And for example, with 8:30 news, we could very simply see that once we already run the sell side and we entered that higher time frame PD array for a quick run on stops to soak up all this buy side liquidity. Before we jump into real chart examples, let's also take a look at the free drives bearish reversal pattern. It's very simple. It's exactly what we looked at previously, just flipped on its head. Instead of lower lows, we now start to form higher highs and higher lows into a higher time frame PD array. We want to see 3 swing points into that higher time frame PD array. And once we identify that, we could get a strong reversal, just a quick run on stops. We could get a potential 2022 model short where we break structure, we pull back into a fair value gap, optimum trade entry, whatever, and we continue lower to run out all the sell side of the free drives pattern. Alright guys, now you know the ins and out of the free drives reversal pattern. Now it's time to look at a real chart example. Right here I prepared Wednesday, the 27th of September, last trading week, so I didn't go back into May or June to find a good free drives pattern. I've already found it here, last trading week on Wednesday. So if you want to, do a little exercise, go back to your trading view chart and try to see if you can identify the free drives pattern on the 27th of September 2023. Pause the video here for a second and come back to it once you've done your analysis. I hope you took advantage of this little training exercise. Let's dive into price action. So right here, this is the previous day's low. Right here, Tuesday's low. We marked that out on our chart. This is our higher time frame PD array or area of interest. We already saw Asia consolidate, London continue with a uptrend. After London, all we did was spend time inside the range until we broke down and started to move towards our higher time frame point of interest. And that's exactly where we saw the free drives pattern. We see we make that first swing point or drive into our higher time frame PD array point of interest. We pull back, form a lower high. We continue lower one more time. Pull back to form a new lower high. So this is our first drive. This is our second drive. And right here we have our third drive. And this is exactly what we're looking for. We have our first swing point, second swing point, and third swing point into our higher time frame PD array below the previous day's low. And so now we have three different scenarios of what could play out. All this is right here is engineered liquidity. I explained that at the beginning of the video, while we do not always get a nice pullback opportunity, and sometimes instead of getting that 2022 model, we just get a very strong reversal that's almost impossible to catch unless you jump in it with a market order. But now that you know that this is a potential setup with the free drives pattern followed by a strong reversal, it should make more sense to you now, because that's exactly what we did here. If we zoom in and mark out our buy side, we have buy side above this high, we have buy side above this lower high, and we have buy side above this high. We run out the first high, we do not pull back to fill in this inefficiency. We do not care about it. It is being left behind as a breakaway gap. And we immediately continue to run out the first high, the second high, and the third high. Do we continue to run higher? No, we do not care about clearing this high, or even the current high of the day, which has been put in place by the London session right here, represented by this blue box. We simply take out the three most recent lower highs after we fulfilled our free drives pattern to the downside with a bullish reversal from a higher time frame bullish PD array below the previous day's low. We get this strong reversal setup. And it's important we did not get the 2022 model, because therefore we would have needed a pullback into, let's say for example, this bullish fair value gap for the continuation higher, then maybe another pullback for the next continuation. Alright guys, thanks very much for watching the video to the end. If you liked it and maybe learned something new of how to anticipate a strong reversal or how to add more confluence to your 2022 model setups, make sure to subscribe to my channel and leave a like. This really helps me to grow on YouTube here. And if you haven't already, also make sure to join us on Discord, because on our Discord server I share daily trade ideas, like for example this 2022 model that has formed on Friday, so last trading day. I called it out right here after we swept the London session low and we had our shift in market structure. I was eyeing this bullish fair value gap, and this is exactly what happened. We filled this fair value gap and we continued to leave it as the low of the day after we swept that London sell side. And much more. Our whole community is here on Discord, so you don't want to miss out. I also have a little section about how to learn ICT concepts. Everything is in here in this little thread. I talk about fair value gaps, inversion fair value gaps, market structure, liquidity, breaker blocks, and much more.